This is our weekly market update. We start in the US, across the Europe and Asia, and in Australia, covering crypto and commodities along the way. US equities pulled back this week after a torrid rally as investors turn their attention to tax and spending legislation poised to swell the US government's $36 trillion debt. The US House of Representatives, controlled by Trump's Republican Party, on Thursday narrowly passed a tax and spending bill that would enact much of his agenda while adding an estimated $3.8 trillion to the debt over the next decade. The bill is heading to the US Senate for its review. Long bond prices fell this week, and as yields move in the opposite direction, the 30-year yield topped 5%, hitting its highest level since late 2023, while the 10-year was a 4.507. This was part of a wave of selling from the bond vigilantes, which is increasingly looking like market dysfunction at the long end of the curve. See my earlier post on this. Trump's fiscal plans consumed investor attention for much of the week, especially after Moody's downgraded the US sovereign credit rating due to concerns about the nation's growing debt pile. Long-dated government bond yields have been rising globally amid the sell-off, although they did pull back a little at the end of the week. In a note, Bank of America's Michael Harnett said the 10-year rolling return from US Treasuries is negative, in the same humiliating place stock returns were in February 2009. Investors are fearing that projections for the US debt mountain could increase further when a sweeping tax and spending bill goes through the Senate, with the risk that bond yields stay higher for longer. Bond sell-offs were widespread, but investors' unease was most visible in markets with weaker fiscal foundations. Sell America is back in vogue, Barclays strategist said in the note, as US equities, treasuries and the dollar all came under simultaneous pressure.